Hi, welcome to this video today. It's the 5th of May. It's Thursday now. In today's video, we're going to look at trading big trends, getting into them and trend following them longer term. Now, in relation to this, we're going to be looking at USD pairs. We've got quite a few pairs to look at. We'll go to the charts in just a moment. Now, in terms of recent videos, we've been very bullish of the USD. USD's had a great run to the upside. In our video on Monday, though, we were warning we could see a little bit of a pullback, but if the dollar did pull back, that would be a buying opportunity. The dollar did fall after the Fed, and now we're moving back to the upside. The dollar is going way higher in our view. The fundamentals behind the charts are extremely bullish. I'll explain why when we go and look at the pairs, which is what we are going to do right now. But just before we do so, please always keep in mind, it is my view as of right now. It could change in line with the market action and conditions. If you want to learn all our trading techniques, learn our strategy, and also check out our daily technical sentiment analysis of 14 FX pairs, all you need to do, go to the link beneath this video and you get live access to our member center. Right, let's take a look at the trade setups. First pair, AUD USD. Now, for anyone new watching our videos, we do very simple charting. Okay, we've always got a bias from the big fundamentals and sentiment behind the chart to give us the view. Then we use simple technicals. Now, in terms of big fundamentals and sentiment, extremely bullish for the USD. Now, in terms of the price action, it's changed quite a bit since I updated this chart, okay, this morning in the Members Centre. If we look at what happened with the Fed, just first, I'll go through how you can play this trade in a moment with the updated price action. We had a really great run down there. It's about 600 pips for us. Then we took half out. We wanted to come back in on a break of 70 or a rally. We don't get the break of 70. The other half of our trade comes out. We pierce that red tail there, so we had our stop behind. We run on, and today we just want to sell through the low. Now, in terms of the big blue candle, why? The Fed were hawkish. They raised rates, they cut stimulus. They didn't do more than the market expected. So it's kind of, buy the rumor, sell the fact. And, people, relieved, let's say, the Fed were not super hawkish, okay? So you get the relief rally, but the Fed are hawkish, and you get the Aussie turned down a little bit. And tonight, let's have a look at it. AUD USD. She really does follow through to the downside. Now, in terms of my preview video, I mentioned that the Fed reducing stimulus, not just hiking rates, they're going to be reducing stimulus. It's extremely bullish for the dollar because it takes dollars out of circulation. Now, in terms of the big backdrop, aside from interest rates, it's dollar bullish. You've got a slowing global economy. That's always dollar bullish, okay, historically. And you've got geopolitical tension, so the dollar gains on its safe haven status, okay? So it's a nice red. How would you play it if you wanted to come in? Well, tonight what I'm going to do is I'm going to bring my stop down to 72.70. Okay, so we're just like 50 pip risk. If you're coming in fresh, you're basically going to have to risk a couple of hundred pips. You could wait for a pullback, okay? But if I was bearish, I would just go in the market because of the downside potential. Small trade, then I would look to add maybe on a pullback or on a break lower. Just go back to this chart. So we're down here now. You could come through the 70 level. That's a big level, okay, with another half. And if you get through 70, I can't say exactly how I play this chart right now because I'm obviously hoping the Aussie will fall. But if it did get through 70, it might stop probably be behind the 71 level, so behind this big blue. 65, there's a long way to go on the downside. Just from the 71 level, that's 600 pips, isn't it? So this looks extremely bearish. Also, I've said it in my preview video, you should keep your eye on USD CNH because the Aussie will go down if the USD goes up on the CNH. Why? Because basically, if the People's Bank of China let the USD rise, which they're doing, okay, that shows that China's economy is not in good shape. It's the world's biggest commodity consumer. Okay, so slow up in China and a falling yuan is bearish for all commodity currencies. So have a look at what the yuan is doing tonight. USD CNH. Nice blue. Hopefully we get to a new high and keep going. Long way to go on the upside. What else is bearish for the Aussie? S&P, bearish for all risk currencies. Sorry, let me just get the right chart there one. To get the rally, double top down. If this continues to follow through to the downside, it will weigh on all risk currencies. I mentioned it again in the preview video that if we look at the monthly chart, take out 20-month moving average. If we can get blue, not blue, if we can get red, I start selling off, there's a long way to go on the downside. Why? Because this rally here from the 2.4 level, yeah, there's the COVID sell-off. There's the rally from the 2.4 level to 4.8. 100% rally was 90% driven by Fed stimulus. That's now going. That means that stocks will, I think, be pressured. I put some charts in relation to stocks and stimulus again in the preview video if you want to go and check it out. So the Aussie dollar is looking good. What about the next one? Right, USD CAD. Now, in terms of my last video, I was long above the 128 level. Just on Fed Day, decided to take it out. I was going to buy strength if it came, or try and pick up a pullback. Obviously, we pulled back. Today we're blue. We're obviously hugely dollar bullish. Would go with minimal confirmation with a stop clear of the round number beneath the low. Okay, now in terms of USD CAD, what does she do? She reverses nicely to the upside, and I think, okay, we're off the high, but I think go through the high you could buy. Where are we going? 135, and I think the stop, you could put it just behind the round number. Say I'll move ours up to 126.80, something like that, and then look for 135 on the upside. I didn't show the monthly chart on the Aussie. I'll show the monthly chart on this one though. So you can see the USD working its way higher. You've got some tails in the way, but yeah, for us that is fair value. So hopefully, what is it? It's about 600 plus pips to the upside. So yeah, so we'll see what happens with USD CAD. Now, in terms of the next pair I want to look at, it's the final one of the major commodity currencies, and we are heavily bearish of it. It's the NZD. Now, in terms of the NZD, we had a great run down in it. This is monthly support. It was kind of resistance when we were down here. We just got clipped by a few pips. We top out. Double top, you've got two bodies over there, you've got big round number behind. We're just waiting for it to run away from the monthly support zone. Okay, it's through, but it's only through by 10 pips. We like a few more pips. Like, yeah, we normally go 20 pips away from a round number, sometimes 30, depending on the pair. Because, yeah, you always get a lot of noise around round numbers. It's where big institutions tend to transact orders. So what are we doing with the NZD? Let's have a look. NZD USD. Well, this is the monthly chart, and basically we're through the 65 level, obviously, and I'm looking for 60. So down here, I think that could be on the cards. In terms of daily chart, she's got a whack. She's gone away from 65. Okay, so we're about 100 pips down now, so that's good. I think this is a good sell for the 60 level. Stop back behind 65. I think back behind these two bodies here, and you got tail, body, body there. So got the round number in the way. You're back from the round number. Look for a move to the downside. Now, of course, you'd always wait for pullbacks, but yeah, sometimes they don't come. So yeah, I think I said it earlier. Put a small trade in. You can put another small trade on a pullback or on continuation. Okay. But yeah, they're the three major commodity currencies. Now, the next pair I'm going to look at will be Euro USD. Euro USD, in inverted commas, this is probably the safest USD long. Just don't think the euro's got much upside at all. Everything is going wrong in euros, and I mentioned it so many times. I won't go through the fundamentals behind this chart and go and check my other videos. But we did have a rally on the Fed up to the 106 level. Okay. In terms of what we're doing tonight, let's have a look. Not much movement really. You come down basically to 100 pips to 105. I really want to see this low here taken out. Okay. If it is, then basically we are going down, in my view, to the par level. So another, 500 odd pips. We may even overrun to 90. If we do break lower, the stop can be back behind 106. I'm going to say 106.40, just behind that tail there. We're holding from 108.50. So yeah, it's a decent profit. But yeah, I'd just like to see the volatility in this one pick up. Think hopefully that will happen soon. But for anyone trading it, just don't think your upside is much at all. Taking out 107 is going to be really hard for the euro. Anyway, it struggled to take out 106. So yeah, going down. Where should we go next? A euro proxy we really like. USD CZK. We like the Eastern European currencies. Short on the dollar simply because of Russia, Ukraine. They're close proximity. They do a lot of business there. And yeah, I think that Russia-Ukraine crisis is just not, well, obviously it's not looking good. It could get worse, okay? Now, in terms, we did have a long-term trade in, and we got stopped out, and just basically came back in long off that support level. Now, in terms of this one's got a load of upside. If I just go to where the price action is right now, USD CZK, you're seeing some strength. I think if we get through 23.50, if you're bullish, you could buy right now, obviously. But 23.50 will really, I think, cement to move the upside. I'm not worried about these candles over here. Where are we going? If I just bring up the monthly chart, I'll show you, or where I think we're going. I think we're going up to the 125 level. Okay, so over here where these candles are, or maybe even back to chart highs. So if you believe that view, the risk reward is really good. Also, they are, the euro proxies will be pressured by the euro. If the euro goes down, they'll probably go down quicker. Obviously, Russia, Ukraine is in the mix. If we get big risk off, they're very vulnerable. Okay, so let's go back to, sorry, where am I? Okay, next pair, USD PLN. This is the one that's the closest, obviously, to the Russia-Ukraine crisis. This is going way higher. There's a nice move up for us. We then get stopped out. We just really want to come through. It's minimal confirmation. Okay, now if we have a look, USD PLN. This is the monthly chart. Okay, and apart from that peak there, there's nothing to aim at. So the way I'm going to play it, actually, that's a nice reversal up. I'm just going to run it with an open target. Just feel that the downside is limited. We'll go far higher. Okay, a couple more pairs to do. Let's have a look. What do I want next? I want USD MXN. This is a commodity currency, an emerging market currency. We did have a long in, then we get stopped out. Then she runs on to the downside. There's good support here, okay? And we're pushing up. Just want to see it clear these candles here. 4 bodies. So we get through there. We wanted to go long this morning. MXN. We're basically through. And in terms of upside, it's considerable. Okay. Oh, sorry, wrong page. In terms of upside, it's considerable. We're looking for up here. We'll see if it obviously gets to the targets, but Mexican peso, emerging market, commodity currency, very, very vulnerable. Another one to look out for, and this is USD try. Okay, so US dollar against the Turkish lira. We're long of this one, but it's in a very tight channel. Okay, I mean earlier, if we break the top of the channel, I would buy. I think that's about a 6% move if we get up to there, and I think it could do it quickly. Yeah, we talk about we've got problems with inflation in the UK going up to 10%. Feel sorry for Turkey. They got 70% inflation and a current account deficit that points to a lira meltdown. So what you could do if you want to come in, just buy it, okay, on a breakout. If it doesn't follow through, you can always freeze the trade out. So yeah, this one, like the look of. I like tight range breakouts as a general rule anyway, because when you get a breakout, the range ends. Yeah, then you very often, I don't want to curse the trade, get continuation. All right, last pair to look at. USD ZAR. Now, in terms of this one, I've done a few videos on the ZAR. Caught that big move up, and then we got stopped out. That's a huge move. This is a very volatile pair. And after being stopped out, again, I don't want much confirmation, so it's through this level here. And this morning, yeah, we made a nice move up. However, in terms of where we are tonight, that's a really, really nice move. If you wanted to do this one as a fresh position, I'm going to bring my stop up probably behind these red candles here, these couple of bodies where we poked up through the 1580 level, came back, and then we zoom away. So behind these bodies, coming in fresh, go through those bodies. Okay, so basically 1611. Where could we go? Let's find the monthly chart. I'm looking for back up here, 18. Basically, it's I'll pick that level up because we got there, got above it, exhausted back. Yeah, the tail is nearly there. So yeah, that would be a massive move up if it does occur for us. But we have had a good move up in terms of our first trade there. That was a really good move. Second move, I think, could be even bigger. So yeah, that's the way we view it. Obviously, things can change, but yeah, I just see the dollar fundamentals are just so bullish, and it is the global reserve. And I read a lot of nonsense online about the USD will lose its global reserve status. No, it won't, not in the short term, because the majority of transactions in currency markets go through the dollar, don't they? It's about, what is it, 70%? Look at global reserves of central banks. Majority is dollars. And also, very important, the majority of loans granted in the global economy, again, are in dollars. It's a fact that Eurozone banks, for example, British banks grant more loans in USD than they do in their own currency. Why is that significant? Well, because when you've got a contracting or slowing global economy, you haven't got so many loans granted. There's not so many dollars in circulation. And also, a lot of credit lines are pulled in. So let's say this credit line is in, well, let's say it's in South Africa. That comes back to the bank. It goes from rand back to dollars. So that helps the dollar as well. And I think, I'm sure most people think this. I think global economy is in its most dangerous times that I can remember. And also, the geopolitical situation in the world at the moment, with the Russia-Ukraine crisis, we hope it doesn't get worse, but, the problems it's already causing within, boosting inflation, tensions between superpowers, possibility of nuclear weapons. I just fancy the dollar long. It's working okay for us on the re-entries. We did get stopped out of a good few trades, but we got decent profits on the first USD pair. On the USD pairs we covered in the preview video. Hopefully, these trades turn out well. And just very dangerous times. I just think the dollar could bubble to the upside, but I'm probably labouring that point. But that's the way I see things. We'll do a weekend video. I'll start covering more pairs in my weekly videos. I've been a bit focused on the USD. I'm getting very bullish of the yen. The yen gave me a hard time actually, but I think the yen could be on the verge of a big move to the upside as well. Right, that's the video for the day. Thank you for watching. Take care.